Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. Over the years, you've heard lots of awesome guests on this program. Well, today, it's our very favorite guest. It's you, your questions, and our answers on this edition of Ask the Guys, today on the Real Estate Guys radio program. The Real Estate Guys are throwing a party and you're invited. Join us live at the New Orleans Investment Conference, October 12th through 15th. Now in its 48th year, it's the nation's longest running investment conference and features some of the biggest names in economics and investing, including Jim Rickards, Danielle DiMartino Booth, Rick Rule, Doug Casey, James Grant, and George Gammon. And of course, the Real Estate Guys are speaking again this year. Plus, we're hosting an awesome party one of the evenings with some very special guests. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms, and joining me, our co-host financial strategist, Russell Gray.
Hey, Robert.
We have awesome guests on the Real Estate Guys. We love to pick their brains, find out what they're thinking, get their expertise and opinions. But today, it is one of our all-time favorite guests, and that is you, ladies and gentlemen. It's Ask the Guys, questions from our audience. And I will say we're a little behind. We typically do the show every 10 to 12 weeks, and the last time we did it was March, and we're overdue, and the mailbag shows that. We've got lots of great questions. We're going to try to get to as many as possible, so we'll jump right into it. The only caveats are we do not give advice. We give ideas and information, and we are not tax or legal professionals, although we have opinions about things. So we'll do our best to share resources and ideas with you. We certainly can't answer all the questions that come in anymore, but we try to pick the ones that'll have the broadest appeal. So with that, our first question comes from Kelsey in Edmonton, Alberta, Canada. Hello, guys. I'm a 20-year-old in Canada, and I'm here to ask for your advice for a young person who wants to get into real estate investing. I'm in my third year of my undergraduate degree in nursing. I plan to complete my degree, then potentially buy my first house and go from there. Any advice on this? Thank you so much. Well, Kelsey, first of all, congratulations at your young age for thinking about investing in real estate. I will say that the earlier you start, the better you'll do. The reality is compounding everything takes time, and those that start in their 20s are always going to do better than those that start in their 50s. Not to say it's too late. If you're in your 60s or 70s, you can still make hay. But as a 20-year-old, you have your life ahead of you. So I think a couple of things here. First of all, you're already on the right track. You're listening to our show, hopefully some other shows. You're getting an education, which you need. The next thing you need, once you get educated, and lots of places to go do that today, is you need to start grooming yourself financially to be a real estate investor. And I know, Russ, this is a topic that is near and dear to your heart.
Absolutely. Having come out of the mortgage business and raised many children and brought them into the mortgage business, this is really a sweet spot for me. So what a lot of folks don't realize is all of the components of their resources. We call it the 7 essential investor resources, which is cash, cash flow, equity, credit, and then you have time, talent, and relationships. We'd make the argument that your time, talent, and relationships are the most important, but when you're a young person on the financial side, usually you don't have very much cash, very much equity, but what you do have is credit, and if you marry that to cash flow, meaning income, then you can borrow. So the secret to real estate that makes it so amazing is you can purchase all or most of it with other people's money. Part of that is going to be the bank's money. Most of it is going to be 75, 80%, and sometimes you can work out either with investors or owner carrybacks the rest, or you save it yourself if you're going to start with a small property. So I would say at your age, the first thing to do financially is to make sure that you're working and generating an income. But my very first thing would be to meet with a mortgage professional, let them know what your plans are, and ask them to help you groom your credit profile so that you will be lendable as soon as you're able to work full time. One of the things they'll probably tell you is that you should be earning money in something related to the profession you're going to be in. So if you have an undergraduate degree in nursing, the plan is that you're probably going to go into nursing. If you can find something healthcare related, then that's going to be a continuation or an expansion of your current career. Obviously, education's super important, but a lot of times people who are young, who are used to going to school, think it's all about information. And the truth is that real estate is really about relationships. And so you want to be active in local clubs. You want to put together maybe a group of other young people like yourself, do book studies, attend seminars, because each one of you, when you get into the relationship, brings resources. You'll have people who do have money that might be potential investment partners with you. You'll have people who are out there in the marketplace turning over rocks looking for deals, and they may find a deal they don't want to do or can't do, and they may bring you in either partially or fully and flip the deal to you. And once you get out there and start turning over rocks looking for deals yourself, you may find deals that you can't do, but you could flip to another qualified investor. That's called wholesaling. It's a great way to generate cash. So many, many things you can do, but I would say get your borrowing profile figured out under the tutelage of a mortgage professional, and then get into relationships with people that are already playing the game and expand those relationships so that you can get into the deal flow and capital flow.
Two other things. When it comes to relationships, you're already in a great industry. You're going to meet other nurses, doctors, people in the medical field. A lot of folks who are in that area have money and not a lot of time to invest. We meet a lot of professionals from the medical community in their 50s and 60s who are putting away the cash but don't have any time to invest in real estate. You could be the conduit there. And then the final thing is potentially buying your first house. A house, Robert Kiyosaki teaches us, is not an investment if you live in it, right? It's not an asset, because an asset, in his mind, puts money into your pocket every month, and your home you live in takes money out of your pocket every month. So I'm not saying don't buy a house. What I am saying is, at your young age, either being in college or coming out of college, you may not need to own your own house. You might instead put those resources towards buying a rental property.
One other option on that, Robert, would be to go ahead and purchase a house, but rent out the rooms. And then that way you've got income coming in from the house you own. You get owner-occupied financing. You're right there managing the property in real time. You have a lot more flexibility in terms of who you accept and who you don't, because you're living in the house and they're your roommates. But you, in some cases, can generate enough income to cover your entire housing expense, and you live for free, plus you get the pay down of the loan, plus you get the tax breaks, plus you get the long-term appreciation. So that's another thing to consider, especially because you probably are going to have a good network of responsible young people like yourself that you've met in school that have gone through your training and need a place to live also.
Great idea. One more quick thought for you. The 21st Annual Investors Summit is coming up, and we've got a special program for young investors. If you're aged 18 to 25, which, Kelsey, you are, you come at an incredibly reduced rate. And if you can't afford that, we even have a scholarship program. Get on the advanced notice list for the summit by sending an email to summit@realestateguysradio.com. Thanks, Kelsey. Our next question comes from Thomas in Flushing, New York. Hi, Robert and Russell. I'm a newbie in real estate investment. Do I need an investment worksheet to keep track of my finances on what and where my money is going? If there is such a worksheet, could you direct me to where I can get my hands on this? Thank you, Thomas. Well, I thought that these kind of went together, and I'd love to start with the more introductory questions. We've got some more seasoned questions coming up, but when you're just starting out, what about that, Russ? I mean, most people who haven't thought about investing in real estate probably don't even have receipts in a shoebox. So how can they get prepared through keeping track of their finances?
Well, there's two advisors that you want to work with early and always in your investment career, and that's your mortgage professional and your tax advisor. And they're going to teach you how to keep books and records that are going to both appeal to banks who are going to give you loans and also to manage your taxes. One of the caveats is that if you work really closely and do a great job reducing your taxes, you may make yourself unlendable. And this is why you have to have the two of them working with you together. To answer your question directly, Thomas, with regard to an investment worksheet, it's really not an investment worksheet. I mean, you can use QuickBooks or Quicken. There's three statements that you're going to need, and two most people worry about, and one they mess up on. So one you're going to need is your profit and loss, money coming in and expenses going out. If you're running your own business, P&L is a little bit different than a cash flow statement. Cash flow statement is really what cash you have coming in and what cash you have going out. And these are the things that your lender is going to look at to determine whether or not you can afford to borrow. So you want to have that really figured out. The other thing is you need to know what you can afford to borrow and what you can afford to spend. So there's lots of books on just basic household budgeting and systems for doing that, whether you use an envelope system and a very simple little ledger, or whether you do something more sophisticated like a piece of software. But keep track of money coming in and money going out and know where your money is and where you can cut back when you decide it's time to sacrifice if you need to, either in order to save or to stretch to buy a property. The other thing is your balance sheet. It's assets and liabilities, and it's a little bit different. Technical accounting is you'll count things that have value, like a car or a collectible. Robert Kiyosaki in Rich Dad Poor Dad would make the argument that those things aren't really assets if they cost you money to maintain them or if they don't generate cash flow. So if you haven't already, read Rich Dad Poor Dad and play the cash flow game, because it teaches you how to look at your financial statements from an investor's perspective, where you're putting assets on your balance sheets that generate passive income. Ultimately, the goal of investing is to create enough passive income to cover all of your expenses so you no longer have to work for a living, and you're spending your time building things and building a portfolio and building businesses that pay you to own them.
One more thing, Thomas, about keeping a record of everything you're doing. It will show you where your money's going. It's very illuminating if you haven't done this before. You just say, where does all my money go? Well, write it down and you'll figure it out. And that will put you on the path to be a prudent real estate investor. It's Ask the Guys. Your questions are answers. This next question comes from David in Murfreesboro, Tennessee. I'm not sure if I said that right. I haven't been to that part of Tennessee. Hey guys, I love your radio show. I've been listening for about a month now, and you've really opened my eyes to all the possibilities that real estate can offer. I'm 25, and currently my wife and I have $30,000 in an investment account, and if I refinance my current home, we have another $100,000 in equity. In your opinion, what is the best way to put this money to work? My home market has appreciated over 30% in the last 2 years, so I feel as though I'm priced out since a 3 to 1,100 square foot house is roughly $280,000. The numbers won't make sense for the rents I can get. Are there better markets I can go see close to home, since it'll be my first rental property? Thanks for all you do. David, congratulations. And not only are you starting at a young age, but you and your wife have been able to squirrel away some money, and that's awesome. As far as accessing the equity, we'll touch on that in a minute. But where do you put your money to work? This is always the question, and you have to develop what we call your personal investment philosophy. You mentioned specifically being close to home. Well, for many people, that's a part of their personal investment philosophy. They want to be close to the property they own, even their rental properties. But for other folks, they aren't as interested in being close to them as they are being in great rental markets with good durability and long-term appreciation prospects and rent escalation and so forth. For years, I've said, live where you want to live and invest where the numbers make sense. The good news is you do live near some markets that are pretty positive for this. And I know, lots of Tennessee has appreciated a ton. Lots of the U.S. has appreciated a ton. So there are some specific markets we might mention that we enjoy. Certainly, it's no secret the real estate guys love Memphis, Tennessee. A lot more affordable. Prices have gone up, but in the bread and butter kind of blue collar rental world, still the numbers work. So we like that. But the thinking is, am I going to access the equity out of my home, which is going to increase my payment? And if I make that decision, whatever I invest in has to cover that and a little more besides.
Yeah. So, David, there's a couple things here to think about. First of all, great, as Robert said, that you've saved some money and that you've built some equity. Equity happens, right? You bought the property and some of that was down payment equity, but if it's available, then probably some of that is appreciation. So good job. You're in the game. Again, one of your strongest tools is going to be your borrowing power, your ability to get mortgages. And the better your credit, the better your debt to income ratios are, the better your rates are going to be, the better your cash flow will be. So be very attentive to maintaining that. And again, I'd say do that under the tutelage of a mortgage professional. We have a gal that is on our advisory team, and she's written a free report about helping people get the most cash out of their properties. You can get that by sending an email to cashout@realestateguysradio.com. In terms of where we're at in the market, one of the things you have to understand is that equity's happened everywhere. And even though rents have gone up, the numbers are much tighter. And you combine that with some rising interest rates, now you've got a situation where the cash flows get very tight. So this is a much more tricky decision. And I would say that the idea of, hey, I want to be there so I can go see the home, it means you're basically saying, I think I'm the best property manager, or I think I'm the best team. And I would argue you're probably not. What I would focus on is looking for markets that have the right supply and demand dynamics, more people moving in than moving out. And we have market reports available. You can see those under the resources section, realestateguysradio.com. Just look under resources and you'll see market reports. And you can pick out some markets. Maybe you'll see some things in the news, and then you can begin to follow those markets and get some expert commentary. We have a guy who does that research and writes that commentary. And so you can purchase those market reports, and they're fairly inexpensive. And then you can begin to watch the markets. Once you find markets that you think have the right supply and demand dynamic, the right in-migration dynamic, that you think have a bright future for the long haul, because real estate is a long haul investment, what you really want to focus on is building relationships with the people who will be managing those properties. And people always want to go in and find the great real estate broker. I would say go in and find the great property manager. Find somebody that really knows how to manage property well, and then ask them what their typical properties look like and how they're performing financially, and then ask them this great question. If I were to put properties in your portfolio to manage, it would make you successful. Where would those be? How much would they cost? What would that look like? And then go buy those properties. That's the way you want to do it.
That is a gold nugget, David. Absolutely. You know, this is why we have been doing field trips for years and years, where we go into a market and really look at the drivers. We just got back from both Ambergris Caye, Belize, and Jacksonville, Florida. Jacksonville's interesting because although those prices have gone up, they have not gone up as much as other cities in Florida. So that's a market we like. You can get a report on that market by sending an email to jacksonville@realestateguysradio.com. And as Russ said, in our resources section of our website, lots of information on markets, but you're on the right track. You don't have to invest in the market you live in, or even close. Live where you want to live. Invest where the numbers make sense. It's Ask the Guys. Your questions, our answers. We've got a lot more today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hi, I'm Robert Kiyosaki, and I encourage you to listen to those wild and crazy real estate guys. They're the best, been working for years, and they know what they're talking about.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com and your favorite podcast outlets. It's Ask the Guys. Your questions, our answers. If you have a question for us, all you have to do is go to the website at realestateguysradio.com and click the button that says Ask the Guys. This question comes from Anna in Lisboa, Portugal. Hi, Robert and Russ. Hope you're doing great. Before my question, I'd like to thank you for all the great content that you share with the world. It has been very helpful. Okay, just a little hint. When you pay a nice compliment, we're definitely going to read your question. Not definitely read it on the air, but we'll definitely consider it for inclusion. This is a great question, though. She says, my question is the following. I live in Portugal, and in 2017, I bought a 4-bedroom apartment for cash that I'm renting to students. Love that model. The cash flow is 800 euros per month. I managed to save money to buy a second apartment, and if I pay for it in cash, I can still keep some money in the bank for future expenses. Since money is losing value as it sits in the bank, I would like to know if buying in cash would be the wisest decision, or if you would suggest I get a loan. I'm 40 years old. At the present moment, I do not have any debt, and honestly, with the hard times we're living in, I would prefer not to have debt. But since I'm no expert, I would love to hear your opinion on this. Thank you once again for all the helpful information. Wishing you an amazing day, Anna. All right, Anna, great question. And excellent. You took action. You bought property. I'm going to guess in Portugal in the last 5 years, equity has happened. So in addition to this cash flow, which you have, which is great, you've also got a property, which is an asset. Now you have enough money to buy a second one. So let's just talk about leverage versus unleverage. If you buy for cash, it means you're going to buy less, own less, but you're going to be able to absolutely sleep like a baby at night because you don't have a lot of worry about what happens if the rents go down, what happens if there's government interference, what happens if people can't pay the rent. On the other side of it, though, is leverage allows you to magnify returns. So I think this is another toss to our financial strategist.
Yeah, if you can get your hands on a vintage copy of Equity Happens, we get into a lot of the philosophies behind this. And of course, after having gone through 2008 and really learned more about some of the risks in real estate investing, there's pros and cons. Obviously, liquidity is really important. Cash in the bank is great. If we have a downturn, if things go on sale, you're going to be glad you're liquid. The challenge is if you have your equity in a piece of real estate or your reserves in real estate and not cash in the bank, if prices were to drop, you're on the losing end of that. Right? Your equity goes away and you don't have cash to go shopping. So while it's safe not to have the debt, not having cash can be a disadvantage when buying opportunities come. The other thing is to get the equity out, you either have to sell the property, potentially realizing the gain, certainly incurring transaction expenses. And if you want to borrow it out, you have to qualify. So I like the idea of having some cash outside and available to you. And what you lose in inflation is the price you pay for the benefit of liquidity. So not large amounts of cash, but I ran my business in my life where I only used credit for liquidity, and that turned out to be a big mistake. So I like having some cash on hand. Robert's already talked about the benefit of leverage. You can do the math. I'm not going to try to do math on the radio. It's too complicated, but you actually can increase your return on investment, own more properties for less cash by introducing leverage. The key is you've got to be very attentive to property management and cash flow and paying those bills on time. And if you make a mistake or have a problem, that's where, again, some liquidity, some cash in the bank buys you the time to fix the problem before you lose a property in foreclosure. The danger of having a lot of equity in a rental property is you have liability being a landlord. And if all your wealth is in the property, then anybody who's going to sue you knows exactly where your money is, and you can't protect it. So even having it in some type of an entity for asset protection doesn't protect the equity that's in the property because it's owned in the entity that they're going to sue. So there are some good reasons to have liens on the property and not have equity in the property. And the other thing is equity looks great on the balance sheet, assets minus liabilities equal net worth. And you go, ooh, look at me. I've got this big net worth. But you know what? If you can't spend it, if you can't use it, if you have a property, a 3-bedroom, 2-bath house that is worth $100,000 or worth $1 million, at the end of the day, it doesn't really matter. It's still just a 3-bedroom, 2-bath house. So you want more properties, not necessarily more equity. Equity is only valuable if you convert it back into cash and use it to acquire more properties and streams of cash flow and tax breaks. So there's not a yes or no. These are things for you to consider in your own personal situation. And then if you want to have some safety, one of the things that I think is a great idea is instead of keeping your equity in the property, and if you're not ready to buy more real estate, you're waiting for a better cycle, better cash flows, better interest rates, whatever, start stacking up something besides cash, like precious metals, and then use that to offset. So your equity is not in the property, it's still in your portfolio, but in the form of precious metals, and you use the debt to control the property and then your cash to control the precious metals. And if you do have continued inflation, your precious metals probably will insulate you from that, making your debt smaller, but you're always going to be liquid. So that's another strategy you may consider as you look at the landscape in today's market.
All right, Anna, and great to hear from Portugal. Listeners in more than 190 countries, and it's good to hear from folks all over the world with their questions. Our next question comes from Rainier in San Jose, California. That's a place we know pretty well, since that's where Russ, Greg, and I met all those years ago. Hi, guys. I want to get your thoughts on this. My issue is not being able to get financing for the new homes I acquire. I use an LLC now to get loans from companies like, and he names a company. My issue is to access the equity of my primary residence or the equity of my first 10 rental homes because traditional banks turn me down on refinancing. I'd like to access that equity to have down payments to scale. So we'll talk about that. And then he asks, are you guys going to be at BP Con in San Diego in October? That's the Bigger Pockets Conference. And the short answer is absolutely, we're going to be there. And we'll look forward to meeting you, Rainier, there. We'd tell you more about it, but there's no reason to because it's completely sold out. But a couple thousand folks are going to get together in San Diego, and Russ and I will be among them. So this is a great question because a lot of times folks get to the point by putting together, what Anna just talked about, buying another property, buying another property, buying another property. If you decide to do that with debt, you run into a wall. And the wall is lenders look at your entire portfolio and how much debt you have. And at some point they go, wait a minute, you've got a lot of property, you've got a lot of debt, and you become less attractive to them. We call this being Fannie and Freddie'd out. And depending on the properties you buy and where and from who and how you finance them, somewhere between 4 and 10 properties is about the most single family homes you can have. And so I think a great strategy to access your equity might be something a little out of the box, which is a blanket encumbrance on the homes that you plan to keep.
Yeah, this is where you get a loan against a collection of properties, and then hopefully you have a partial release clause, which means that if you want to sell one, you can sell one and pay off a prorated portion of the loan. Commercial lenders make these loans, or sometimes private lenders will make these loans. But I would say go back to the very beginning, as I've been saying all along in this show, get together with a mortgage professional and help them prepare you to be an effective borrower on single family or 1 to 4 residential properties. And you're going to have to follow their coaching. You may have to pay a little bit more tax than you'd like in order to qualify. That's the price you pay. The key is that you make more money on the loan than you pay in the tax to qualify for it.
Well, and the rates might be higher on these kinds of loans, but the reason isn't to get a lower payment. The reason you do this is to free up that equity.
Exactly. Then again, have creative financing people commercial lending people who might be able to do these blanket loans, portfolio loans. That's another way to do it. Another way to do it is private money. You can get people who are interested. So you don't necessarily have to go to a lending institution. You may find people that are invested in CDs at 1 or 2% that would love to have 4, 5, 6, 8% backed by real estate. You can make that offer privately and set that up, right? So that's a way to do it. That's a form of syndication, but it's not a security because you're offering direct mortgages. So you definitely want to have attorneys involved to make sure you do it properly, but there are creative ways to do it. One of the biggest challenges always is, how do I free up this idle equity? The equity is not making you any money. It's controlling the property, and typically you can free it up for a lot less than the potential return on investment if you were to be able to put it into other properties. So you're thinking the right way. What you need are technical advisors, a tax advisor, a mortgage advisor, a commercial advisor, and then a little bit of training in some creative finance. And so there are people out there who do that. We teach syndication, obviously. That's kind of our sweet spot. I'm guessing there's going to be all kinds of resources at the Bigger Pockets Conference, so make sure you walk the exhibit hall and see who's there and what you can learn. But definitely thinking right, trying to free up that equity and put it to work, because again, idle equity, it's an exposure. I think you want to get it free from the property and put it to work, either with more properties or protect it from a downturn.
It's Ask the Guys. Your questions are answers. We've got a bunch more. Plus, we'll ask you a question as we play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2023 Goals Retreat, January 6th through 8th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events or call 888-489-7723, extension 18. Get your life back on track, physically, spiritually, and financially. Attend the 2023 Goals Retreat on the first weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hey, this is Peter Schiff, and when you're not listening to me at schiffradio.com, make sure you listen to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you lack clarity on where you're going in your life and what it takes to get there, then come on out to our annual Goals Retreat. It happens the first weekend of the new year in beautiful Lake Las Vegas, Nevada. Come create your future at perhaps the most unique seminar you've ever attended. All the details on the website at realestateguysradio.com under events. It's Ask the Guys today. If you have a question for the Real Estate Guys, just go to the website at realestateguysradio.com and click the button that says Ask the Guys. Before we get back to the questions, it's time for us to ask you a question, as we do every week with Real Estate Trivia. In just a minute, you'll hear our Real Estate Trivia question. As soon as you think you might know the answer, then send your best guess to trivia at realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, because the first person that gets it right gets this awesome new book called Think Big, a collection of gigantically helpful stories from awesome folks. It's just come out, and you can get a copy if you know today's Real Estate Trivia question. Last show, we were visiting with attorney Garrett Sutton about his new book, Fail Not Fail. We asked this: Uruguay had the most lawyers per capita, edging out the U.S. with one lawyer for roughly every 240 citizens. But there's actually a country that has one lawyer for every 139 residents. Which is it? Well, the answer is Israel, with 58,000 active attorneys registered with the Israel Bar Association. That's a lot of attorneys per capita. Here's our real estate trivia question for this week. Name the top tourist destination in the world. Yeah, of all the places that people go and want to see, where's number one? Where's the place that more tourists than anywhere else show up? If you think you know, or you just want to guess, send your best guess to trivia at realestateguysradio.com. Trivia at realestateguysradio.com. Send us your best guess along with your name and physical mailing address, because if you're the first to get it right, you're going to get this brand new book, Think Big. That's today's real estate trivia question. It's Ask the Guys. Your questions are answers. We'll do another one of these shows probably before the end of the year, so get your questions in by going to the website at realestateguysradio.com and click Ask the Guys. This next question comes from Matthew in Glen, Virginia. Hey guys, are you holding the syndication seminar in the spring? I think I remember you offering these twice per year. I'm quitting my job and pursuing real estate full-time once I complete my current deal, but can't make the September meeting because of lack of vacation time this year. Thank you. Well, Matthew, yeah, we do the Secrets of Successful Syndication twice a year. The next one happens in 2023. I'm not even sure it's on the website yet, but we'll tell you. It's March 24th, 25th, 2023 in Dallas, Texas. For more information, just send an email to syndication@realestateguysradio.com. Our next question comes from Steve in Gig Harbor, Washington. Hey guys, I'm 51 and married to my wife of 26 years. I'm a pilot making a comfortable living and I have an enjoyable career. We have 5 rental houses. We began with one almost 20 years ago. We've self-managed some in the past and some across the state through a property manager. All rentals are owned free and clear and pure cash flow. With 8 years left until retirement from the airline for me and school teaching for my wife, we are interested in leveraging our equity, roughly $1 million as much as possible, to either purchase a combination of single-family and short-term rental properties or go even bigger and attend your syndication conference in Dallas. Our retirement goals will be to travel around the world a fair amount, but also have an interesting business side of our lives to keep us thriving, growing, learning, and engaged. I'm scheduled for a phone meeting with Stephanie Riley at USA Mortgage in about 2 weeks to see what strategies and financing I might be able to use. My question is, after making a plan to use my equity with Stephanie, should I start looking for individual houses now or hold my money and wait until after your conference to see if I want to use that cash for a much larger investment in syndication? Thank you so much for your time, podcasts, and willingness to share your expertise. All right, Steve. Well, Stephanie Riley is the gal who wrote that report we talked about, Cash Out, at realestateguysradio.com. And she helps people strategically look at what they have to work with and what they want to do with it. So that's a great start for sure. She'll give you some excellent insight. As for what to do with the money, we've already covered, I think, the topic of leverage, and you have 5 rental homes owned for cash. You know, keeping 1 or 2 of those just owned for cash might be a way to sleep at night, but you also have this impending retirement, which sounds like you're not really going to retire, but see the world and also manage your real estate. So you probably have capacity to do a little bit more.
So I would say one of the assets that you have that you're not giving yourself maybe enough credit for is your experience. First of all, you're a professional. You have achieved a decent amount of success in investing that many people would be envious of. You're a proven performer. So that's all very leverageable in a syndication career. And syndication, a lot of people think it's a big responsibility, and it is, don't get me wrong, but it doesn't mean you have to work 80-hour weeks. It doesn't mean you have to be full-time. It means that you have to add to your deal structure deals that you reasonably can manage effectively with your other obligations. And so don't feel like you have to quit and become a full-time syndicator. So I think what you're going to find out is that you can expand your portfolio and bring people on board who can help you build bigger, faster, and you can still maintain a lifestyle that fits. I'll give you a case in point. We have a guy in our program named Ryan Gibson. Ryan was an airline pilot. Ryan came to our Secrets of Successful Syndication probably 5-6 years ago, didn't even know what the word syndication meant. And he discovered syndication. He started syndicating. He and his wife and his partner and his wife began managing deals. The last 3 years, Ryan has raised over $200 million, and he is now 3 times named to the Inc. 5000 fastest growing companies. So that's the kind of thing that can happen. Will it happen for everybody who comes to the syndication event? No. But during that entire time, he maintained his lifestyle as a pilot. He flew when he wanted to fly, but he didn't need to fly, and he ran his business, and he brought on a team. But the point is, syndication is such a great tool. So give yourself credit, not just for what you've accomplished financially, but what you've accomplished in terms of your investing experience, and understand that's very leverageable. I don't see any harm in continuing to look for deals. If you find a deal that makes sense in a market like this, jump on it. You know, you can always do a reverse syndication. In other words, you can go buy your individual portfolio, build it out, and maybe you have 10 rental houses or 20 rental houses. And then you decide to syndicate. You might say, okay, I'm going to take a package of 5 of those houses and offer those to investors and syndicate it, free up my capital and go do other things. Or you can go raise new money and just do deals and keep your own personal portfolio and go build a syndicated portfolio. So I don't think it's an either or. Congratulations on your success. Congratulations on your vision. Your expertise and your track record is far more marketable than you realize. People are going to look at someone like you and say, this is a very responsible person, right? Major corporations trust this person with hundreds and thousands of people's lives on a daily basis. This guy's an A student. He's built a portfolio that is very successful. I think I would put my money in with him. I think you'll have no problem raising money. Can't wait to meet you at Syndication.
Totally agree with that, Steve. However, I do want to be sensitive to one part of your note, which says using the cash to invest in a syndication. If all of that work to be a syndicator sounds a little daunting, and you'd rather emphasize more on the travel and retirement, then passively investing in these kinds of deals is something you can absolutely do. Takes a lot less time, but you do have to vet the syndicator, the deal, the market, and all that. We'll teach you that at the event as well.
Well, if you invest in properties in areas that you'd like to travel anyway, you may be able to combine that into a lifestyle. So just another thought there.
Absolutely. It's Ask the Guys today. Your questions, our answers. This question comes from Tania in Lincoln, California. Hey guys, what is your take on using a whole life insurance plan as investment capital? If you like this strategy, are there companies you would recommend to work with? Thanks. Well, Tania, this is a big topic. We're not going to spend a lot of time on it because it does take some time to understand, but we're kind of fans. And this is a financial strategy that is fairly advanced, and yet we have a lot of people in our world taking advantage of it.
Yeah, what it really comes down to is you purchase a whole life insurance policy as a foundation, and then you marry to it a rider called a paid up annuity. And you are able to put a bunch of money into that where you have deposited, if you will, with the insurance company, a bunch of your capital, and you have the ability to put it to work and borrow against it, but you don't have to qualify, and you actually don't even have to make payments. And again, I'm not sitting here giving you insurance advice, tax advice, or investment advice, but this is my understanding. So in some ways, it's a better place to store equity than in your property, and that's what people do. They build equity in these policies and then use the capital the same way you would use equity in your properties to reposition. It does come with some flexibility. Some of the risks are that you're dollar denominated. You can't pivot into other currencies, which is one of the reasons I also like to use precious metals. That gives you the same ability, but it's a little bit different because you can pivot into other currencies. You aren't really as hedged against inflation, and you do have some counterparty risk, but insurance companies, especially, A-rated insurance companies, tend to have very strong balance sheets, and those contracts are pretty reliable. There are some tax advantages. So a reputable company in this space, we have a couple that we have in our resource center right now. You can check that out just by going to realestateguysradio.com and clicking on resources and then looking for people in that insurance arena. We have some free reports on this subject in there as well, where you can go a little bit deeper. But we know many, many high net worth people, successful people that use this strategy as part of an overall portfolio strategy to diversify some of their exposure away from real estate, equity, and away from banks. And I got to say, I think that's probably a pretty good idea.
It's Ask the Guys. Your questions, our answers today on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from December 9th to 12th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 16 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And at Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me December 9th to 12th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market's interesting to you. But that ball's in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trips. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize December 9th to 12th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize.
Hey, this is David Green, author of Long Distance Real Estate Investing and The Burr Book, and host of the Bigger Pockets podcast. And you are listening to the Real Estate Radio Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you want to have an awesome time and hang out with the Real Estate Guys, well, then come to the New Orleans Investment Conference. Happens in the middle of October in beautiful New Orleans, Louisiana. You'll be invited to the Real Estate Guys private awesome party by sending an email to New Orleans at realestateguysradio.com. Give you all the information to sign up for the conference. Lots of amazing speakers, and the Real Estate Guys will be there. It's Ask the Guys, your questions, our answers. This question comes from Mary in Big Bear Lake, California. Hi guys, I'm a Canadian living in California. I recently moved here 2 years ago to raise my boys with their American dad. I'm selling my condo from Canada and thinking of investing that money in a rental income here in the U.S. I spoke to a mortgage lender and they said I need proof of income showing at least 2 years, but I was raising my two boys and I don't have that. I don't want to wait that long. Is there any other way? I'm 35 and feel like I don't have much time. All right, Mary. Well, this is pretty common, and congratulations for talking to a mortgage professional. Anytime you are buying in a different country from where your financial history resides, there obviously is the currency exchange from selling your condo in Canada and bringing it here, but that's all navigable. I think the issue is just how the lender views you. There are absolutely other ways to buy property, and that's something we can talk about.
So there are lenders that will make asset-backed loans and they don't really worry about income. And so your mortgage lender is probably trying to fit you into a conforming loan box, and that can be okay if you can do that. They may be able to coach you into some alternatives. They're stated income loans again. You know, they used to call them liar loans. It's not quite that liberal, but they do exist. So that's an option. The other option is to look for someone who has good credit and partner with them. You and they would both be on the loan, but you'd be relying primarily on their credit. So you could talk about doing some type of an equity share where you bring most of the money and they bring most of the credit. That's another option. You could try to move up to commercial property where it's a lot less about your debt to income ratios and more about the property's individual performance. One thing I'll say, maybe it's just my age, but you know, I understand having a sense of urgency at 35 years old, but you're still very young and you still got a lot of time. So if for whatever reason you find that you're not able to get the kind of financing you want, what you really want to do is immediately put yourself under the mentorship of a mortgage professional who can begin to help you create a credit profile and keep you up to speed, because underwriting guidelines are changing constantly. And if you've been paying attention, you've probably seen that the mortgage applications are way, way down because interest rates have gone up. Everybody who's going to refinance has. And so that does make it sometimes maybe a little bit more difficult because of the higher interest rates, but it also means that lenders are competing over a smaller and smaller pool of borrowers. And so in order to continue to stay in business, they've got to open up their lending standards, and where you may not fit in the box today, 3 months from now, you might. So stay very close to your mortgage professional and have them coach you up. And again, consider the idea of you either going commercial or using a partner, credit partner, to help you get into a deal you'd like to do.
Two other possible tools for you, Mary. The first, and while you're building your credit profile, which let's say it does take 2 years, while you're doing that, you could certainly invest alongside others in a syndication, maybe buying single family houses or some of the same kind of assets you're talking about. That will give you experience, but it'll also get you in the game. The other is to find a seller that will carry. And there's some of those today. They've got equity in their property. They may own the property for cash. So rather than needing to go to a lender, you would have the seller become the bank. Now, that's not necessarily going to build your credit, but it is a way that you can get some money working and some experience while you're building your credit. Now, Mary also had a second question, which I think we have time for. She says, also, I found this great deal on Zillow for a 5-bedroom, 6-bathroom house for just $123,000. I looked around the area, and it seems that Skid Row is about 12 minutes away. No one is biting, and it seems like a super good deal. I almost want to offer $70K for it. It's been on Zillow for 40 days. What do you think? Want to partner up? All right, well, I love the enthusiasm about that, and this is exactly what you need to be doing, is looking and understanding. You don't even mention the market. It may be the market you're in, but it may not, so we don't know enough to give you any insight on the deal, but we will share a couple of things. First of all, Zillow's gotten a lot better over the years, but even today, if we're presenting for a large group, I'll say, hey, how many of you have checked out the price that Zillow shows for your home? And of course, most people have done that. And then I'll say, keep your hand up if you think they were spot on. And the vast majority of hands still go down, meaning Zillow's an algorithm that helps, and they've got great data, but you can never rely on what they say. So it's a start, and it's a place to search, but the real work becomes, what do you do with a 5-bedroom, 6-bathroom house in this area? Might not make a great rental, could make a great assistant living facility, could be a great fraternity or sorority, could be a great rental. There's lots of things that you could do with a property like that. You just have to continue to do the work. If nobody is buying, that's what we call a clue. I remember going to a land auction years ago, and I had 2 parcels that my partner and I were interested in, and one got bid up, and that's a longer story, and the other one, no one bid on, and we were at least cautionary enough to not make the first bid, and thank goodness. I still don't know what was wrong with the property, but it was 200 very sophisticated investors and developers in the room, and not one of them bid on the property. So all I'm saying is there might be a reason that nobody is. I'm not trying to dissuade you from considering the investment. And this is the type of thing that you could go find partners to do and not even need a loan. Maybe it needs some work. Maybe there's some work you can do on the property to get the value up. But I would say congratulations on your diligence. There's probably a little more homework.
Absolutely, Robert. I couldn't agree with you more. Appraisals are interesting. Estimates of value are interesting. But when a property is put on the market and properly exposed to the buying public and it's not selling, it's because the price is too high. And, you want to buy it before it hits the right price, or you're not going to be the buyer and you're going to be the one setting the price. And so you do have to be cautious about that. And the other comment you made earlier about the idea of the owner carrying, sometimes people think I'm going to get the owner to carry back their equity and then I've got to go get a new loan. But in your situation, Mary, you're saying you may not be able to get a loan. There's another technique called a wrap. And in that, you make a down payment to the owner, and then you make a payment to the owner, who then makes a payment to their underlying mortgage. And so you've basically taken over their mortgage. Now, it's like a contract of sale, like a car. You don't get title right away. You get it on the back end when you pay the property off. You got to paper it properly with lawyers. But this is a way to take advantage of cheap loans that are out there on properties that aren't selling. And when you don't have the credit. So it's just another creative financing strategy you may consider learning more about.
And as interest rates are going up and house prices are going up, we may see more of that coming down the road. Well, thanks everybody for your questions. If you'd like to get a question answered by the Real Estate Guys, just go to the website at realestateguysradio.com and click Ask the Guys. In just a couple of weeks, we're opening up registration for the 21st Annual Investors Summit on the Sand. It's happening in June of next year. You can get on the advanced notice list by sending an email to summit@realestateguysradio.com. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors, from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.